So, how are you? I hope you are doing good. So, are we ready to start the class? 5 minutes I have given time to you. You people started here something ende mottam Malayalikal ano. Okay. So, are we ready? Am I visible? Audio, video, everything is fine? Okay, Vishweshwar said ready, sir. Okay, so if we are ready, put the heading section 143 of the Companies Act. Put the heading section 143 of Companies Act. Duties of the auditor. Duties of the auditor. What are the statutory duties of the company auditor? What are the statutory duties of the company auditor? So, before we discuss something about duties of the company auditor, do you remember yesterday we have discussed about powers or rights of company auditor? Powers or rights of company auditor. Tell me, what are the powers or right of company auditor? 1. Right of access to books of account. Right of access to books of account and other records. Right of access to books of account and other records. 2. Second one is right to obtain. Right to obtain information and explanations. Right to obtain information and explanations from the employees or officers of the company. Right to obtain information and explanations from the employees or officers of the company. 3. A right to receive notices of all general meetings. However, attending general meeting is duty, is responsibility. So it is not a right. Right to receive notice. Till receiving notice it is your right. But once you know that there is a general meeting, attending the general meeting is your responsibility. 4. Can I say right to visit branches? Right to visit branches and to have unrestricted access to books of account maintained at branch. Maintained at branch. This is your 4th right. Okay, so right to visit branches and to have unrestricted access to books of account maintained at branch. This is your 4th right. Then what is 5? A right to report. Right to report on the financial statements of the company. Right to report on the financial statements of the company to the shareholders or members of the company. To the members of the company. To the members of the company. 6. Sixth one is general right, which is not a statutory right, auditor's lien. Sixth one is auditor's lien. What is the meaning of lien? You might have studied in bailment and pledge in Contract Act. So what is this lien? If you remember, your teacher might have told you one example while you are studying Contract Act in law. So you have given cloth to one tailor for stitching a shirt. He has stitched the shirt unless you give his consideration. Like, he said for stitching shirt, he will receive 300 rupees. You agreed and you gave cloth. Now, he stitched the shirt. Unless you give 300 rupees, he will not give that shirt to you. He has a legal right. As per the Contract Act, he has a legal right to take the possession of the good till you pay him money. Similarly, auditor rendered service on the financial statements and books of account of the company. So unless you pay his auditor's remuneration, he can exercise lien on the books of account of the company. So this auditor's lien is taking the possession or holding the possession of books of account. Taking the possession of books of account till his auditor's remuneration is cleared. Auditor's remuneration is cleared. Okay, however, there are so many restrictions here. Can auditor exercise lien? There are so many restrictions. Lien can't be exercised. Lien can't be exercised on audit report. You have to give audit report. Why? Unless you give audit report, how audited financial statements can be tabled to shareholders in AGM? So if you do not give this audit report, company cannot convene AGM. That will be a statutory default. So don't exercise lien on audit report. This is point number 1. What is point number 2? Lien can be exercised only on books of account, but not on any other property of the company, any other property or assets of the company. Lien can be exercised only on books of account, but not on any other property or any other assets of the company. Then the third condition is lien can be exercised only on those books of account where the auditor conducted audit, he worked on it, then only you can exercise lien. For example, 2019-20 audit fee is pending, you cannot exercise lien on 2018-19 books of account. If 2019-20 audit fee is pending, 2018-19 books of account cannot be held in your hand. You have to take the books of account into your possession for the period in which you have conducted audit and where the audit fee is pending. And on the top of all these things, there is also one very critical legal point. That is where the books of account or books of account of company are to be maintained in the registered office of the company. In the registered office of the company. If books of account of client are found in the premises or residence of auditor, it is an offense. It is a punishable offense. So, Mr. A is conducting audit of X Limited. Mr. A is conducting audit of X Limited. Okay. So, what is this rent? Mr. A is conducting audit of X Limited. X Limited is in, say for example, Hyderabad. Auditor is in Mumbai. So where the books of account of X Limited are to be held? Only in their corporate registered office. So if they are removing books of account outside Hyderabad, what they have to do, Board of Directors resolution is to be passed. Resolution to be passed. And this resolution should be submitted to ROC. Should be submitted to ROC within 7 days. Within 7 days. So without passing this resolution, if you send books of account to auditor, it is a default on the company. Company is contravening the Companies Act, because as per Companies Act, books of account are to be maintained in your registered office. You are not following it. If you are removing books of account outside your premises, you need to pass a board resolution and you have to submit that to registrar of companies within 7 days. If you are not doing that, it is offense by the company and also it is a punishable offense by the auditor. If you are the auditor of the company, you know the provisions of Companies Act. How can you take the books of account outside the company? Remember, even when you are conducting audit of a company as an articled assistant, or as a qualified chartered accountant, or as the auditor, whatever your capacity is, remember, auditor goes to the company premises. Books will not come to audit office. In case of sole proprietor or partnership firm, books can come to the office of the company. I will sit in my office and I will conduct audit. Possible when? If it is sole trading firm or a partnership firm. If it is a company, books will not come to my office. I have to go to company premises. So where the audit will be conducted? Audit should be conducted in the premises of the company. Otherwise, it is an offense. So even in CA final, as per Chartered Accountants Act, it is a professional misconduct if the books of account of a client company are found in the auditor's office or auditor's residence. Now the question is, if board of directors have not passed a resolution and gave books of account to you, how can you exercise lien on it? So don't you think practically it is impossible? Practically it is impossible. And I will tell you another bigger reason why auditor's lien is not possible today. Why auditor's lien is not possible today? If I go to conduct, can I get above 80 marks in audit? Sandeep Singh, you are asking, can I get above 80 marks in audit? In last attempt, one student got 97 in CA final audit. So it is possible, but you should have two things. One, subject to presentation skills. If you have that two, 80 easily achievable. 80 definitely achievable. Okay, chalo, let us come back. So now what happens when I am conducting audit of a company? What company will do, they will create one ID and password for me. They will create one ID and password for me and they will say, Pavan sir, we are using ERP or we are using SAP. You sit in front of this computer, take this auditor's login and password, log in into it and then conduct audit. So if the company has 100 branches or if the company has 100 businesses, all the details I can see in this computer of the client. Now, how will you exercise lien? Can you exercise lien on this computer? No, impossible. You should not. So, this auditor's lien, what I practically believe is only in theory, but in reality I have never seen. I am a chartered accountant for 14 years. I have never seen this auditor's lien in my life. Okay, in practice it is not possible, but as per the books, this is one of the rights of the auditor. But remember one thing, auditor's lien is not statutory right. It is not given in the Companies Act. Nowhere in the Companies Act auditor's lien is discussed. Okay, so look here, nowhere in the Companies Act auditor's lien is discussed. So basically this is not a statutory right. So auditor's lien is not a statutory right. It is not a statutory right given by Companies Act. It is not given by Companies Act. Okay, so now what happens? It is not a statutory right given by the Companies Act. It is a professional right which he has got by using Contract Act. This can be asked in one MCQ. Which of the following is not statutory right given by the Companies Act? A. Right of access to books of account. B. Right to visit branches. C. Right to receive information and explanation. D. Auditor's lien. Then what is the correct answer? Auditor's lien is not a statutory right as per the Companies Act. This is what you have to understand. So we have discussed everything in auditor's rights or powers as per the Companies Act. Now I will ask you one question. A question for you. You need to understand. Secret superstar, sir, will SM class come on this channel? Okay. So SM classes will be available on Google Drive. They are not available on this YouTube Cap Classes channel. Okay. So let us go back. Mr. A is MD of A Limited. Mr. P is the company auditor. Mr. P inquired about the investments of A Limited in the equity shares of B Limited. Mr. P inquired about the investment of A Limited with equity shares of B Limited, and whom did he inquire? He inquired Mr. A. Mr. A contended that Mr. P cannot inquire the MD of the company. He said the information will be given by the finance head, and auditor has no right to get information from MD. From MD. Is Mr. A correct? This is the question. This is the question. So, my dear friends, this is the question. Now, I seek your answer. Tell me the answer. Tell me the answer. So, easy, correct? So, Muhammad is saying no. Hizana Nargis is saying no, he is not. No. Joel is saying no. Silpa is saying no. Ajnaz is saying no. It is the right of the auditor to access information. Lakshmi is saying no. Amala is saying no. Navnita no. Top 10 no. Secret Superstar, how can I buy your SM lecture? Boss, please contact our phone number. You will get the required information. Arundhati, no. Kevin, no. No, he cannot. Okay. Now look here. If you observe the rights of the company auditor, I have given the rights of the company auditor. Look here. A right to obtain information and explanation from the employees or officers of the company. Officers of the company. Officers include MD also, no? MD, manager, company secretary, whole-time directors, all the directors will come under officers. So, my dear managing director of the company, I am the statutory auditor. It is my statutory right to obtain information from you. If I seek information, you have to give it. You do not have any other right. You cannot reject. If I ask you, you have to. If I say give it in writing, you have to give it in writing. If you are not giving required information by the statutory auditor, it amounts to restricting the scope of the auditor, placing limitation on the scope of the auditor, which will make me to write this in my audit report. I will write in my audit report and give it in writing to shareholders or members of the company that the company has not furnished the required information when I asked. That will be a very severe case. So, my dear MD, your contention is wrong. Not just the finance manager and other employees who are responsible for the auditor. If I ask you, CEO, CFO, MD, whoever you are responsible to give information to me. At times, the internal auditor and audit committee also should give required information to me. Even if you are internal auditor, even if you are audit committee member also, if I ask information, if you have that information, you have to give it to me because it is my right. So you understand this? Now. So let us go to the duties of the auditor. This is very important area. Duties of the auditor is very important area. Okay. At length, so many provisions are there. One by one we'll go. First we'll start with section 143 subsection 1. Section 143 subsection 1. Okay. How many matters are there? Here 6 matters are there. Remember, 6 matters are there. How many matters are there? 6 matters are there. Okay. Now let us see one by one. Okay. Now, can you see A, B, C, D, E, F? On the screen, can you see A, B, C, D, E, F? So, how many are there? 6 clauses are there. Okay, now read this. Section 143 of the Companies Act specifies the duties of an auditor of a company in a comprehensive manner. It is noteworthy that the scope of duties of an auditor has generally been extending over all these years. Okay, what they are saying that the duties are increasing. Okay, no problem. Duty of auditor to inquire on certain matters. How many matters? 6 matters. It is the duty of the auditor. It is the duty of the auditor to inquire into the following matters. Okay, inquiry means asking a question. What is the meaning of inquiry? Inquiry means asking a question. So when you are asking a question, how the sentence should be? The sentence should be questioned, should be framed in a question manner. That is the reason whether, where, whether. If you observe, all these are questions. Why you are inquiring? So you are asking questions. So what is the first one? Whether loans and advances made by the company, loans and advances made by the company on the basis of security have been properly secured, and whether the terms on which they have been made are prejudicial to the interest of the company or its members. So I'll give you 10 seconds of time. Read the whole point again. All of you, read the whole point once again. Navnita is saying, sir, not clear, we cannot read. So you are not able to read this. So shall I zoom it for you? So check if you can read now. Navnita, I have increased the size. So now tell me, are you able to read it? Whether the loans and advances made by the company on the basis of security have been properly secured, and whether the terms on which they have been made are prejudicial to the interest of company or its members. Navnita, I am waiting for your answer. So is it readable now? If it is not readable, you have to get ICI study material and sit. Oh, very good. Very good. So take your notes and write down section 143 subsection 1 point number 1. Write down section 143 subsection 1 point number 1. Put the heading loans and advances. What is the heading of this point? Loans and advances. Okay, now I am asking you one question. You have to respond in the chat box. Loans and advances made by the company. Loans and advances made by the company. Whether the company is a borrower or the company is a lender. My question is whether the company is borrower, option 1, or option 2, whether the company is lender, or option 3, both cases are covered. Both cases are covered. So the word used is loans and advances made by the company. What is the meaning of loans and advances made by the company? Is it that company has taken loans and advances, or company has given loans and advances? What exactly it is, or it considers both? So Muhammad is saying borrower, company is the borrower. Very good. So what about others? Ajna's borrower. Lakshmi Manoharan, lender. Very good. Next. What about the others? I need participation from all of you. The phrase used is whether the loans and advances made by the company. So whether the company is borrower, whether the company is lender. So Manu, lender. Ruku, lender. Top 10, lender. Then Pooja, lender. Josna, borrower. Kevin, lender. Navnita, both. Then Nargis, lender. Mufida Parveen, lender. Ashwin Raj, both. Maithili, both. Akshit Das, both. Vishweswar, borrower. Okay, very good. Now I'll tell you the correct answer. The answer is company is lender. So company is lender. So company gave loans. So what is the situation? Company gave loans. Company gave loans. Company gave loans. So when company has given loans, what are the points to be considered? What are the points to be considered? Write down in your notes. Write down in your notes secured loans. Write down in your notes secured loans. So what is this? What is this? Section 143. What is this? Section 143 subsection 1 point number 1. Loans and advances. Under this write down point number 1. The company is the lender. Therefore, loans and advances are the assets of company. Loans and advances are assets of company. Then this clause deals only with secured loans. Only with secured loans. Read the point. What did they say? Loans and advances made by the company on the basis of security. So the only applicability here is secured loans. That means unsecured loans are not covered. Unsecured loans are not covered. Unsecured loans are not covered in this clause. Unsecured loans are not covered in this clause. What the auditor has to inquire? Look here properly. What the auditor has to inquire? Whether the terms and conditions are prejudicial to the interest of company or its members. And what the auditor has to look for? Terms and conditions. Terms and conditions. What are these terms and conditions? Terms and conditions refers to interest rate, repayment schedule. Interest rate and repayment schedule. Whether interest rate and repayment schedule are prejudicial. Prejudicial to the members or to the company. What is the meaning of prejudicial? Prejudicial means against the welfare of, against the interest or welfare of company. Whether it is against the welfare of the company. Say for example, outside interest rate is 14%. Outside, banks and financial institutions are taking interest at 14, giving loans at 14%. You have given loan to some company at 6% per annum. This is against the welfare of company. You are ruining the company. The borrower can be your related party. So what happened here? X Limited gave loan to Y Limited. Y Limited could be my related party. Or they gave loan to director. Or they gave loan to some party at 6% loan. Now the auditor will ask, why the hell you gave loan at 6%? Why the terms and conditions are favorable to the borrower? Why they are not favorable to me? So when you are giving loan, obviously you will look for your welfare, no? Why are you looking for the welfare of the borrower? That means you are looting money. Something is fishy here. This is not fair deal. Something happened behind the scene. That is what auditor will question. So what is this clause? This clause is point number 1. Loans and advances given by the company. Point number 2. On the basis of security. Point number 3. Whether the terms and conditions are prejudicial, that means against the welfare of the company or against the welfare of the shareholders. If at all this has happened, the auditor will report. If at all this has happened during the previous year, the auditor will report. The auditor will say, during the year the company has given loan to Y Limited. The loan amount is 5 crore rupees. The fair market interest rate applicable in India is 14% for these kind of loans. However, the company is charging 6% interest only. This is against the welfare of the company. As an auditors, we are reporting on the basis of this inquiry made. This is how you write it. You understand this? You understand? See, just 2 lines clause, how much of meaning is there? 2 lines clause, how much of meaning is there? Now read this, you will understand it properly. So what is this? Whether loans and advances made by the company on the basis of security have been properly secured. Whether security is proper and whether terms and conditions are not prejudicial. If they are prejudicial, you will report. You understand this clause? This is point number 1. Now we'll go to point number 2, second clause. Whether transactions of the company which are represented merely by book entries. Write down in your notes. Point number 2, whether transactions of the company which are represented merely by book entries. Whether transactions of the company which are represented merely by book entries are prejudicial to the interest of the company. Now you tell me one example. I am asking you in your chat box, you have to tell what are the transactions represented merely by book entries. So I am asking you, what are the transactions which are mere book entries? What are the transactions which are mere book entries? Tell me, I am waiting for your answer. Give me some example. Give me some example. What are the transactions which are mere book entries without any physical substance? Navanita, superb answer. I really appreciate. Depreciation is correct answer. Anything more? I want from others also. Mufida, correct. Depreciation is correct answer. Very good. Provisions, goodwill, correct answer. Correct answer. Anything else? Anything else? Tax. Appu, you said tax. No, tax has a physical substance. You will pay tax. Tax is a proper transaction. It is not a book entry. Depreciation, provisions, correct. Correct. Now look here. So, second point, section 143, subsection 1, second point. So total 6 points are there. Second point. Okay. Goodwill creation, depreciation, advance tax. Advance tax is also not a book entry. It has some basis of calculation. Transaction is not there. I understand. Provision, yes. Yes. Now look here. Depreciation, provisions, all closing entries. All closing entries. Without physical substance. Without physical substance are book entries. DTA and DTL, good. Deferred tax assets, deferred tax liabilities, but it is beyond your level. That small part of accounting standard 22 is there, but still you don't learn everything about DTA, DTL. Don't worry about it. Okay. So now I'll tell you one example. One example is there is X Limited and there is Y Limited. Okay, they are sister concerns. X Limited and Y Limited are sister concerns. Patent rights, Jitu, that is intangible asset, but transaction is there. It is not a book entry. It is not a book entry. Transactions are there. Okay, now look here. X Limited and Y Limited are related companies. So on 25th March 2020, X Limited gave purchase order to Y Limited. Y Limited supplied goods to X Limited, on 29/3. On 29/3. Then what happened? On 4/4/2020, these goods are returned. Why they are returned? Defective. These goods are returned. Why they are returned? Saying that they are defective, they are returned. This can be a mere book entry without goods being transferred from one company to another company. Why? You wanted to create profit in the P&L of one company. So what happened? You want Y Limited to be in profits. So you have given a purchase order to buy goods worth 5 crores. So purchase order received on 25/3. Goods supplied on 29/3, but actually goods are not supplied. What you have done, you just raised one goods delivery note. The other company has raised one goods received note. So the other company said goods received, but actually did they receive goods? No. You said goods dispatch note, but did you send goods? No. You know that this transaction is only a dummy transaction. After a few days, what happened? They wrote a mail. They said that goods are defective. We are sending back. and then you responded to the email saying that we are extremely sorry, we apologize and we accept the goods back. Then what happened? Sale booked in this year, no? So here by sales 5 crores you added, so profit will go up. But actually in the next year what happened? The goods were returned. Actually there is no movement of goods. Neither goods traveled from one company to another company, nor goods traveled back from my second company to first company. This is a classic example of a dummy transaction. This is a classic example of a dummy transaction. In fact, this is one of the types of fraud. Auditor has to look into this kind of transactions because this recording sale and sales return is only a book entry. In this transaction what happened? Recording sale and recording subsequent year sales return is only a book entry. If auditor comes to know this, what he will do, by sales 5 crores you have written, no, he will write minus sales returns 5 crores also, so that effect will be 0 in P&L. But if you record sales in this year, sales returns if you record in the next year, both the financial statements are misleading, no? There is no true and fair view. You understand the point? So write down one example. Sale of goods to a sister concern at the end of the year. With a subsequent return in the beginning of next year. Can be a book entry without physical substance. This is the example for this. So what auditor will do, he will report it. He will report to shareholders that the company is recording dummy sales. Then the financial statements will show true and fair view. I have to subtract it. So one example can be depreciation, one example can be provisions, one example can be any other accounting estimate which has no physical substance, and the best example can be this. What is this? Sale of goods to a sister concern at the end of the year and subsequent sales return at the beginning of the next year without goods actually moved. This is one example for this. All of you understand this? Once you understand this, we'll go to third point. So this point is over. No. This first point is over. Loans and advances point is over. Then this second point is over, whether transactions of the company which are represented merely by book entries. Now, can we go to third point? So on the screen, third point is there. Read this. Where the company not being an investment company and a banking company. Is the company investment company? No. Is the company banking company? No. So this point is not applicable to investment companies and banking companies. What the company has done, whether so much of the assets of the company consisting of shares, debentures, other securities like bonds have been sold. So some debentures or shares are sold at a price less than that at which they were purchased by the company. So what is your purchase cost? 10 crores. At what price you sold it? 8 crores. What is the result? Loss. Why the hell this happened? So the auditor is asking you why this has happened. So write down point number 3. What is point number 3? Section 141, subsection 1, point number 3. This is a company not being an investment company. Company is not an investment company. What is an investment company? Investment company is a kind of non-banking finance company. They call it NBFC. Investment company is a kind of non-banking finance company which is incorporated to invest money in another company. So what is if you read the Articles of Association, Memorandum of Association, why did, I incorporate this company is incorporated to invest in the shares of other company. That is the reason it is known as investment company. So if I am investment company, this point is not applicable to me. If I am banking company, this point is not applicable to me. So this point is applicable to a company other than investment company and banking company. To a company other than section 143, not 141. So what did I write in previous sections? Okay, this is a mistake. Okay, good. So section 143 subsection 1.3, in case of a company not being an investment company, not being a banking company, what the company has done, they sold. What did they sell? Either shares or debentures or any other securities like bonds, like public deposits, like commercial paper, something, ADR, GDR, some security. So they sold at a price less than its cost. So what is the selling price? 10 crores. What is the selling price? 10 crores. What is the cost price? 14 crores. What happened? Loss. How much? 4 crores. How much? 4 crores. Sir, second point, if we are auditing on 2nd April, how could we know it is a dummy transaction? You will not conduct audit only on 2nd April. No, these are called subsequent events. You will consider the transactions till your audit report. Can you give your audit report on 2nd April? So the financial year, Lakshmi Manoharan is asking, sir, second point, if we are conducting audit on 2nd April, how could we know it is a dummy transaction? Now listen, you are conducting audit on 2nd April, but will you give audit report on 2nd April? No, you will give audit report in June or July, no? Sometimes audit reports can be given in August also, because AGM will be conducted in September. So till the time you issue audit report, subsequent transactions also should be considered. This is the rule. So you will come to know subsequent sales returns also. Don't worry about it. So come back to this point. In this point, what happened? Point number 1, this is not applicable to investment company, banking company. Point number 2, during the year, the company sold shares, securities, debentures. At what price? At a selling price less than their cost. That means it is a loss transaction. What is this? This is a loss transaction. Now, what is the meaning of this point? See. For example, there is a shareholder, Mr. A, like me. There is a company called X Limited. What is this X Limited? This is a textile manufacturing company. So I invested 1 crore in the company. Why? Because the company is a very good textile manufacturing company. Now what happened? They prepared their P&L and they got say 3 crores operating profit. To profit they got 3 crores. But after that what happened? Because of this transaction, the company lost 4 crores. Because of this transaction, the company lost 4 crores. Now what will happen, Here you will write minus 4 crores. So effectively, this has become 1 crore loss. So the company earned 3 crores profit. But after that what happened? In a share market transaction, the company lost 4 crores. So because of this 4 crores loss, what happened? The net loss of the company is 1 crore in their P&L. Now, if I am the shareholder, I will ask one question to the MD of X Limited. Dear MD, what is your company? Textile company. Why are you investing money in stock markets and losing money there? What is the reason? Who gave you permission? How come you invest company money, which is not your own money? MD is not the owner of company, no, shareholders are the owners. So how can you invest money of this company to purchase shares, debentures, securities, and you are selling them at a loss? Why are you incurring these kind of losses? Now, unless the auditor writes this point in his audit report, how shareholder will come to know that these kind of transactions are happening in the company? So simply the company eliminates this 3 crores, 4 crores, and simply if they put net loss 1 crore in P&L, as a shareholder, I believe this 1 crore loss is because of the textile operations. I don't know that it is because of the share market transactions. Now the question is, student will ask a question. Then Pavan sir, we understand why for investment companies and banking companies exemption is given from applicability of this section. Simple, because in case of investment company, daily you invest in hundreds of companies. So in some transactions you might incur loss, in some transactions you might incur profit, because you are incorporated, your company is incorporated for investments. Now I cannot ask you in one transaction why loss came. Overall financial position or financial performance will be reflected in your financial statements. But in one transaction I cannot ask you. But if you are manufacturing company, I will ask you. Even in case of banking company also, investing in the equity shares of other companies also can be incidental activity to banking company. Banking companies can invest money regularly. So if it is investment company, I will not ask this question. If it is banking company, I will not ask this question. If it is any company other than investment company, banking company, if I am the auditor, I will ask question 143 subsection 1, third point. Dear company, you are not banking company, you are not investment company. Why the hell you sold some shares or debentures or any other securities at a selling price which is less than the cost? You are losing money of shareholders. Why? I will write this in my audit report. This is the third clause. Can a company invest share market using shareholders' money? It can if there is a resolution passed and shareholders agree to that. There are so many restrictions. On investing money, there are so many restrictions. Invested with permission of members. Yes, you can invest with permission of members. Statutory approvals are also required. Resolutions are required. And there is a restriction on the amount of investments also. So you cannot invest the whole money. There are so many restrictions. Okay. So this you understand? Now, my dear friends, I want you to understand one thing. What is the size of each provision? 2 lines or 3 lines? What is the explanation required? This is what we call interpretation of law. If you by heart these 6 points, you can write a straight question. In the exam, if they are asking you, what are the 6 matters to be inquired upon by the auditor as per section 143, subsection 1. You can write 6 points, but never ICI will ask you this kind of straight question. They will give you a case study. X Limited is a company having its corporate registered office in Coimbatore. X Limited's primary activity is manufacturing of clothes. They are specialized in kids, kids wear. They give all the drama. During the year, X Limited invested 4 crore rupees in Y Limited's equity. At the end of the year, since the working capital shortage the company is suffering with, the MD of the company sold this 4 crore rupees worth shares at 3.2 crores. As an auditor, how will you comment? Then you need to write this point. The company is not an investment company. The company is not a banking company. The company is a manufacturing company. Now 143(1) third point is applicable. Like this, if you have to write, you should understand the provisions not just in the letter, but you should understand how to interpret it. That is the reason I am spending too much of time on this. But afterwards, we can fatafat finish the provisions easily. But this 6 points, they need lot of your time. You understand? So this third point is also over. Next, fourth point, whether loans and advances made by the company have been shown as deposits. Whether loans and advances made by the company have been shown as deposits. I want you to read these 2 lines and tell me what these 2 lines is all about. If I show loans and advances as deposits, what will happen? If I show loans and advances as deposits, what will happen? Okay, so read these 2 lines and tell me. I want answer from you. There is absolutely no response. My question is, what will happen if I show loans and advances as deposits? So look here, this is the balance sheet of company. This is the balance sheet of company. Here, assets side, loans and advances. 10 crores should be there. This is real. But the company has shown deposits. 10 crores. This is shown. What is the mistake here? Deposit rates are usually less. Deposit can be withdrawn at any time. Users may think that it is an asset. No, both are assets only. No, loans and advances are also assets. Now, my dear friends, remember one thing. Remember one thing. The word anywhere, if you are using loans and advances, it is always an asset. They are not loans given. In the first point also I told you, loans and advances made by the company. Previously, as per 1956 Companies Act, this is one of the headings as per your Schedule 6, Part 1. So, what is this? As per 1956 Companies Act, Schedule 6, which is similar to your Schedule 3 now, Part 1 deals with balance sheet. There, current assets, loans and advances is a side heading of the asset side. So, whenever loans and advances word comes, the phrase loans and advances comes, remember it is an asset. Remember, it is an asset. You understand this? So, deposits can get back, deposits can be realized back, but sometimes loans and advances may not be received back. Less, but loans rates are more. Deposit rates are usually less, but loan rates are more. Deposits can be withdrawn at any time. Users may think that they are assets. So, any other answer? Any other answer? My dear friends, this loans and advances treated as deposits will affect your current ratio. Current ratio is affected. Why? Deposits can be short-term deposits also. Deposits can be short-term deposits also. But loans and advances usually will be for more than 1 year. No. So you have given loan. Will you give loan for 5 days? Will you give loan for 10 days? No. Deposit can be made for 4 days also. No. Deposit can be made for 1 day also. Deposit can be made for 1 year also. Yes, deposits can be made for more than 1 year also. So usually this will be a non-current asset sometimes, need not be all the time. But imagine if this is a non-current asset and this is a current asset, if you write so, your current ratio is disturbed. You understand the point? Provisions made on loan. Amount is still with the company. Both the Navanita ji, Shana, you are saying deposit amount is still with the company. No. No, when you deposit money in a bank, where is money with you? Money is with the bank, no? So listen, it is simple. It is simple. Case 1. X Limited gave loan to Y Limited. So this is a loan. This is a loan. Case 2. Case 2. X Limited deposited money in Canara Bank. Now, this should be shown as deposit. Case 2, it should be shown as deposit. But the company, when case 2 happened, company is showing it under loans and when case 1 happened, the company actually has given loan, but it is showing under deposits. Now, what has actually happened? What has actually happened? Loans and advances. I have to show 10 crores. This is correct. I am showing it as deposit, which is incorrect. Now, what is the problem of the auditor? What is the problem in this? One, wrong presentation. 2, ratios will be disturbed. Ratios will be manipulated. 3, no true and fair view. The financial statements are not showing. These are the problems. इंग्लिश बोलनी आती है क्या? हा हा हा, बोलनी ही नहीं आती, राइटिंग भी टेढ़ी है तुम्हारी तरह. Okay, so anyway, I did not understand what his problem is. So you understand what is the concern here? So do you understand what is the concern here? So look here, what is the situation? Loans and advances made by the company, how they are to be shown? They are to be shown as loans and advances. They are to be shown as loans and advances. How they are shown? They are shown as deposits. This is wrong. The auditor will report. So what actually happened? Loans and advances given. How company is recording it? Deposits, which is wrong, which is not correct. The auditor will report on this. Okay, so you understand this D point. Now come to this E. Whether personal expenses have been charged to revenue account. Read this point number E. All of you read this point number E. Whether personal expenses have been charged to revenue account. All of you read this point number E. I will ask you one question based on this. Okay, now look here. I'll ask you one question. Mr. A is director in A Limited. Mr. A is director in A Limited. Mr. C, son of Mr. A, has joined MBA in a famous business school. In a famous business school. The fee is rupees 6 lakhs, which is paid by the company. Which is paid by the company. Which is paid by the company. Is this correct? So what happened? There is one company. In the company there is one director. That director has a son. That son took admission in one MBA college. In a famous business school he took admission. The admission fee for that is 6 lakh rupees. Who paid this money? Father did not pay. The company paid this 6 lakhs. Is this correct? Or is this the personal expense? Is this the personal expense? The personal expense of the director charged to P&L of the company? Is this the question? Someone is deliberately disturbing the chat, sir. Please block him. No, it's not. Block him, sir. Please block him. No. See, don't worry about it, okay? Don't worry about it. Listen, simple. If you are understanding, focus on the class. If someone is disturbing, it is his problem. It is neither your problem, it is not my problem, okay? Till the time you are understanding the class, you come to the class, I keep on teaching. Okay, my emotional balance is not such small thing that I'll be disturbed with this kind of things, okay? Chalo, forget about it. Ignore. Read the question, tell me the answer. I want answer. Someone is saying, Jitu, no, it should be treated as loans and advances to Mr. A. Mufida Parveen. Then Jitu, no. Hizana Nargis, no, it's not correct. No. Not correct. Personal expense of Mr. A can't be charged to P&L account. Pooja is saying no. Joel is saying no. Ashwin is saying no. Jinesh is saying no. Akit S. Das is saying no. Okay, anything else? Anything else? Pooja, no, it's wrong. No, it's not. Appu is saying no, it's not. Good. Now look here. it all depends on the contract of X Limited with the director Mr. A. With director Mr. A. In the contract paper, no. Top 10 is saying drawings. Boss, there cannot be drawings. This is company. You are director. You are not proprietor or partner. If you are proprietor partner, you can do drawings. Remember, in case of company, there cannot be. Sir, please shout out PUBG ID. I don't know. Not correct personal expenses cannot be charged to revenue. Boss, this LYNX gaming, I'm telling you, in my life I have never seen PUBG. Okay, so look here. If the contract says annual remuneration 60 lakhs, other perquisites, car, residence, life insurance policy, mediclaim and children's fee, school fee. If this is included in the contract, this is a part of the salary paid to the director. This will be written as managerial remuneration. This question is asked once in CA final. Everybody wrote, no, this should not be written to P&L. This should not be written to P&L. It is the personal expenditure of the director. But imagine if I am a strong candidate for a directorship in a company. To pull me from one company, another company may try, Pavan sir, we'll give you this remuneration, we'll give you all these perquisites, please come. What if my company is giving all these things to me? It forms part of managerial remuneration. So the auditor has to take the contract of the company with the director, read it carefully. If children's tuition fee agreed to be paid by the company and then paid, this 6 lakh amounts to director's remuneration. If this clause is not there in the contract, even then the company paid, then what will you do? You write this as loans given to directors. There cannot be drawings. There can be loans given to directors. Okay, now simple. What is the intention of this point? Whether personal expenses have been charged to revenue. That means where the company has no obligation to incur this expenditure, this is incurred on the personal note of a director or any officer of the company, and then it is charged to P&L. That should be reported by the auditor. All expenses of directors, residence or car or petrol expenses, etc., at times they can be part of managerial remuneration. Read the contracts properly. This is the one. Then the last one, F point, put a star mark. Very important. This is very important. Okay, all of you read this carefully. Where it is stated in the books and documents of the company that any shares have been allotted for cash. What is this? Shares have been allotted for cash. Whether cash has actually been received in respect of such allotment, and if no cash has actually been so received. So you issued shares, but cash has not come. Whether the position as stated in the account books and balance sheet is correct, regular, and not misleading. Read the provision, very important provision, read it. Okay. So tell me one thing. What is the situation? What is the situation where shares are allotted but cash has not been received? Give me one example. There are so many examples. Give me one example. I am asking you, just give me one example. What is the situation where shares are allowed but cash has not been received? I think, can I extend class by another 4-5 minutes? So in 4-5 minutes, we'll be completing this section. Very, very important section. Multiple times asked in the exam. Many times asked in the exam. So very important. That is the reason I am explaining in detail. Bonus issue. So noted. Then ESOP, employee stock options, yes. Bonus issue, yes. Bonus shares issued at a discount. No, if shares are issued at a discount, shares CR7, if shares are issued at a discount, still you will receive cash, no? But now shares cannot be issued at discount also, as per your Companies Act. Shares cannot be issued. Shares to creditors, very good. Shares to creditors. Shares to creditors. Then rights shares. No, Pooja, you are saying right shares. Even in right shares, cash will come. Even in right shares, cash will come. Manu Mohan said yes. Bonus issue, correct. Bonus issue, correct. ESOP, correct. Against obligation. Apu, against obligation is this only, no? Against some loan you are giving it. Against obligation is correct answer. Sweat equity, yes. Sweat equity, yes. It is, if it is completely given free of cost, yes. But sometimes sweat equity shares can be issued at a discount also. Okay. Then anything else? Anything else? Boss, you are forgetting so many points. Conversion of debentures. Conversion of debentures. Sweat equity shares, yes. Then conversion of debentures. Anything else? Now shameless people will write conversion of preference shares. I will kill you if you write it. Conversion of debt, conversion of preference shares. Then anything else? Anything else? Buy in exchange of machinery. Super. Asset acquired. Asset acquired and shares issued in consideration. Any other example? Any other example? My dear friends, you are forgetting mergers and acquisitions. In case of amalgamation, in case of takeover of company, you will issue shares, but cash will not come. For the existing shareholders of the transferor company, transferee company issues shares. Isn't it? I am taking over one company. That company has existing shareholders. For the existing shareholders, I have to give my company shares. No, I have to cancel that company shares. Mergers and acquisitions, amalgamation, absorption, in all these things. ESOP include cash. Is it? Yes. ESOP includes cash. ESOP includes cash. Okay. So, now what is the clause? We'll go back to clause. What is the clause? Where? Sir, my doubt, please pay attention. What is that? ESOP includes cash, bro. I told you. Conversion of debt into equity. Vishwaswar, correct. Appu said, sir, I meant obligation for assets also. Very good. Correct. Okay. So, read. Where it is stated in the books and documents of the company that shares have been allotted for cash. Whether cash is received. If no cash is received, whether the position stated is correct, regular and not misleading. What is this? Look here. During the previous year, during the year under audit, the company issued shares. The company issued shares. This can be of two types. Shares issued for cash. Shares issued for cash. Shares issued for consideration other than cash. Shares issued for cash and shares issued for consideration other than cash. If shares are issued for cash, what the auditor has to verify? Whether cash has actually been received. Whether cash has actually been received. For consideration other than cash, if you issue, whether the manner in which the transaction is recorded. in which the transaction is recorded is correct and whether it is misleading or not misleading. It should not mislead. This is what the auditor has to verify. So step 1, company issued shares during the year. Step 2, if it is for cash, the auditor will take the bank statement and verify whether cash is received. 2. Step 3, if the issue of shares happened for a consideration other than cash, there could be some agreement because of which you issued shares. You will read the agreement and whether the contract or agreement or any other document, shares issued by the company are properly issued, properly valued or no, and how this transaction is recorded in the books, that is whether properly recorded, correctly recorded, and whether it is misleading the shareholders or it is correctly recorded, the auditor has to verify. You understand? This is the last point. Now I'll tell you one very important thing about this section. What is this section? Section 143 subsection 1, which comprises 6 points. These 6 points are enquiries made by the auditor. If these are the enquiries made by the auditor, that means if the transaction has not happened, what is the meaning of transaction has not happened? First clause said, in case of loans and advances made by the company on the basis of security. Auditor came to me, I am finance manager of the company, I am director of the company. Auditor came to me and asked, Pavan sir, whether you have given any loans and advances during the year. I said, no, this has not happened. Auditor asked, Pavan sir, whether you have allotted any shares during the year. I said, no, not happened. So if the clause has not happened or auditor got positive response, auditor has not obtained a negative response. Obtained a negative response. That means auditor is happy. There is no obligation to report. No obligation to report. What is the meaning of this? Loans and advances were not given during the year. Auditor can simply skip these 2 lines from his audit report. In his audit report, these 2 lines will not be there. So now look here, auditor has made an inquiry. And this point is not applicable. Skip the point. You don't need to write in your audit report. This has not occurred. Skip the point. This has not occurred. Skip the point. So if it has not occurred, you will not write in your audit report. Now, tomorrow we will see 143 subsection 3. Very important section. In 143.3, whether your response is positive or response is negative, whether the transaction occurred, the transaction has not occurred, compulsorily you need to report. So 143.3, there is a difference in the nature. This is 6 matters to be inquired. These are factual findings. Auditor got positive response. No need to report. Transaction not happened. No need to report. So transaction not happened, no need to report. Positive response auditor got, no need to report. But in case of 143.3, positive response, report. Negative response, report. Transaction happened, report. Transaction not happened, report. That means in your audit report, compulsorily all these points should be there. Why I am explaining this detail, 2 times questions are asked in the examinations. How they asked, what are the matters to be reported on? What is the question? What are the matters to be reported upon by the company auditor? By the company auditor only if he obtains unsatisfactory or negative answers. This is the question. So what is the question? The question is, what are the matters to be reported upon by the auditor only if he obtains unsatisfactory or negative answers? This is the question. What is the answer? Answer to this question is 143(1). Why? If I got satisfactory answer, I will not write it. No. If I get only unsatisfactory or negative answer, then only I will write it. So these are the matters to be reported upon by the auditor only if he is not happy. You understand? So we are done with this duties part 1. Duties part 2 we'll see tomorrow. So duties of the company auditor given in 143 subsection 1, which are 6 matters to be inquired into and to be reported upon by the auditor. When he receives only negative response, we have completed that. Any doubts till now? So are we done for the day? So can I say the class is over? Thank you. Factual finding means find the fact and communicate. For example, whether books of account are properly maintained. If they are maintained, say that the books of account are properly maintained. If they are not maintained as per law, state in your audit report that books of account are not properly maintained. So identify the fact and communicate. You understand? Identify the fact and communicate. Factual finding means identify the fact and communicate it to shareholders. That's it. Thank you so much. So do you have any other doubts? Friends, a small personal request. Usually I don't ask these kind of things, but because as you have seen, someone is intentionally trying to disturb the class. There are intentional dislikes also on some of the videos. Previously, I never got any dislike. I used to get only likes. So I'm so happy that students have been sharing so much of love to me. So I request you, if you like the class, please, press a like button in YouTube so that, that YouTube channel ranking, this proper video ranking will be good. Otherwise, what happens, if dislikes are more, this video will not be given in the recommendations of YouTube. So I request you, please like the video and please post a positive comment. So based on the number of comments and number of likes, YouTube will recommend this to other students also. So this is also not for the revenue. This is for the benefit of the students. Okay, I tell you one thing. The revenue I get from YouTube is not even 0.000001% of what I earn in live classes. So for revenue, I don't need to take these classes. Because of coronavirus, crash courses are cancelled. Students are sitting at home and in dilemma. Genuinely to help people, I am doing this without expecting anything. So please do like the videos and please do post a positive comment. Okay, sir, today 100 likes will come. I'm so happy. Vishweswar, prejudicial means prejudicial to the company or to shareholders means against the welfare of. I'm not happy. I am sad because of this. Against the welfare of company or shareholders. Okay, for example, I am giving loan at 6% where the fair market rate is 14%. This is what the example I have given. So X Limited gave loan at 6% to Y Limited. If you are shareholder of X Limited, will you be happy? No, you will say, Pavan sir, this is prejudicial to my interest. I am not happy. Give loan at 14%, collect that 14%, I am happy. But if you give loan at 6%, I am not happy. So prejudicial means against the welfare of. Non-prejudicial means in favor of. Okay. So are we done for the day? Thank you so much. We'll come and see you again tomorrow evening 7 o'clock. Okay. Thank you so much. Good night.